Hello and thank you for watching. This is your monthly update on interest rate trends. My name is Trevor Carlson. I'm the president of Heritage Reverse Mortgage. I send these updates out once a month to help people know what's going on with interest rates because I know it affects everybody and everybody wants to know what's happening with interest rates. And so this is our way of helping you to stay informed in what's happening in the market. Now, over the past 6 months, as you can see in this chart, interest rates bottomed out in September. Since then, they started to climb. Because of the end of fiscal year spending, the election in November, and running up until about the middle of January, interest rates were rising until they peaked out. Since the middle of January, fortunately, things have begun to reverse, and we've improved probably about 1/4% as of the 1st of February. And so things have momentum in the right direction. Looking forward, we continue to expect that interest rates should improve throughout February. Looking at the things that are affecting what's happening with interest rates, the three primary things that I'm looking at, of course, is with the Fed. The Fed is focused on inflation. They're still shooting for that 2% target, and they've said that until they get there or get closer to it, they're going to keep interest rates higher. However, if we see unemployment begin to tick up because of business closings or government layoffs or any number of other things, if we see the unemployment rate tick up above roughly 4.2%, this might be a surprise for the Fed, and this could trigger them in taking emergency actions before they hit their 2% inflation target. The third thing that is also on my radar, and this is more of a shadow concern. This isn't something you hear a lot about in the news, but looking at this graph, this shows bank liquidity overall. And essentially what this is showing is that, the Fed's measure on bank liquidity is that they want to see at least $2.8 trillion to $3 trillion of bank liquidity to say that banks are strong, the economy is strong, and we're currently down to about 3.2 trillion. And so we're just barely above their cautionary mark. And so this is something that I'm kind of watching. If we continue to see a dip in bank liquidity, this could likewise trigger immediate response from the Fed, which could dramatically drop interest rates in a short amount of time. And so those are the three things I'm watching. Check back again next month. I'll let you know what's happening in February and where we expect things to go in March. And so hope you're doing well. If you have any questions about your mortgage, real estate in general, reverse mortgages, please let us know, and we'd be happy to help.